binti Abdul Radzak.
Assalamualaikum. My name is Rahmah binti Muhammad Yazid.
Hello everybody, my name is Farhanah binti Khairudin. Assalamualaikum.
Last group to present about the current issue of the tax analysis of the changes for the individual companies RPGT between 2016 and 2017. Okay, I'm going to present about the individuals for the rates, relief and also exemptions that may occur between 2016 and 2017. And the first one, for the relief for error or mistake, this relief is applied when for the repayment of the tax overpaid for your assessment by reason of error or mistake that can be made to the Director General of Inland Revenue (DGIR) within 5 years from the end of that year assessment, where effective on 1 January 2017, a taxpayer is not liable to tax and there is an error or mistake made by him in that return. The person may make an application in writing to the DGIR for an amendment to be made in respect of such return within 6 months from the date of tax return is furnished. For the relief other than in respect of error or mistake, this relief is applied in respect of the following specific reason can be made to the DGIR. So the reason is, the first reason is the exemption, relief, remission, allowance or deduction granted for that year assessment under the ITA or any other written law published in the Gazette after the year assessment in which the return is furnished. The time frame for appeal is within 5 years after the end the year the exemption, relief, remission, allowance or deduction is published in the Gazette or the approval is granted, whichever is the latter. For the second reason is the approval for exemption, relief, remission, allowance or deduction is granted after the year assessment in which the return is furnished. The time frame is within 5 years after the end of the year the exemption, relief, remission, allowance or deduction is published in the Gazette or the approval is granted, whichever is the latter. For the third reason is deduction not allowed in respect of the payment not due to be paid under certain provision of the withholding tax on the day a return is furnished, where the time frame for appeal is within 1 year after the end of the year the payment is made. This reason is effective from 1 January 2017, which is the next year. And the rates for the tax resident individuals for both year 2016 and 2017 are the same. And also for the rates of tax for the non-resident individuals are also the same. For the personal relief, there are a few changes occur for both year, where for the relief of the purchase of the sport equipment and cost incurred for the purchase of books, journals, magazine and other similar publication for the purpose of enhancing knowledge and all. Okay, this is the summary for the changes in analysis of tax for the year between 2016 and the year 2017, where the existing relief, which is the purchase of sport equipment, cost incurred for the purchase of books, journals, magazine and other similar publication for the purpose of enhancing knowledge, also relief of purchase of personal computer once every 3 years. This relief is eliminated by replacing with a new relief, which is the lifestyle relief consolidated for the following. The item is the purchase of books, journals, magazine, printed newspaper and other similar publication for the purpose of enhancing knowledge, the purchase of personal computer, smartphone or tablet, the purchase of sport equipment and gym membership, and also for the internet subscription. And the amount, the maximum amount can be claimed is 2,500. While for the 2017, they have two new relief made, which are the first is the purchase of breastfeeding equipment, which is the maximum amount can be claimed 1,000, and the fees paid to the childcare center and kindergarten also for also the amount of 1,000. Okay, I'm going to explain for the changes occur. For the first one is purchase of breastfeeding equipment. As we know that for the year's assessment 2016, the purchase of breastfeeding equipment is not eligible for individual tax relief. For the year assessment 2017, it has been introduced to assist young family, and it also want to encourage and support women to return to work while continuing to breastfeed their infant, where this relief is limited to 1,000, and the purchase can be made either in a complete or separate parts consisting of the first one breast pump, manual or electric, the second is cooler bag, the third is containers for collection and storage. Who are eligible for claim for this relief? Okay, who can be claimed? Who are eligible to claim this relief? The women taxpayer who are resident with children aged 2 years and below are eligible to claim this relief. And this relief can be claimed once in 2 years from year of assessment 2017. That's all.
Proceed to the next slides. The next relief that have been given is tax relief for fees paid to child care centers and kindergartens. Like we know, for the year assessment 2016, fees paid to child care center and kindergartens are not eligible for individual tax relief. But for the year assessment 2017, new reliefs have been introduced to assist young family. New tax relief, which is limit of Rm1,000, which is Rm1,000 and below, be given to tax resident individuals who enrolling their children aged up to 6 years old in child care center or kindergarten registered with the Department of Social Welfare or the Ministry of Education. But this relief can only be claimed by either parent of the children. This proposal is to ease the burden of taxpayers with regard to the cost of child care and early childhood education. This relief tax effective from year assessment 2017. For the next relief is tax relief for lifestyle. For the year assessment 2016, in order to inculcate reading habits, lead a healthy lifestyle, and enhance the usage of computers and internet, individual taxpayers are eligible to claim tax reliefs such as tax relief for the purchase of reading materials, tax relief for purchase of sport equipment, and tax relief for the purchase of computers. But for the year 2017, for the year 2017, the existing tax relief for the purchase of reading materials, computers, and sport equipment are now combined into a new relief known as lifestyle tax relief, which is limit of Rm2,500 per year. The scope of the lifestyle relief is also expanded to include purchase of printed daily newspaper, purchase of smartphones or tablets, internet subscription, gymnasium membership fee. This relief also tax effective from year assessment 2017. deduction for spouse. Like we know, for the year assessment 2016, the spouse is entitled to a relief of RM4,000 if the husband or wife has no source of income or has no total income to be aggregated with that spouse. But for the year assessment 2017, it is proposed that the spouse shall no longer enjoy the such relief if the husband or wife, other than this disabled spouse, has income derived from sources outside Malaysia and the income exceed the amount of deduction of RM4,000. This kind of deduction tax effective from the year assessment 2017. For the next slide, this is the sum exemption under employment income for the certain benefits in kind for both year to the 2016 and 17. For the exemption for both year 2016 and 17 are same.
Okay, Assalamualaikum warahmatullahi wabarakatuh. Next, I will talk about the company's tax and the differences whether the tax rate has been increasing or decreasing from the year of assessment 2016 to the year of assessment 2017. Okay, without any further ado, we proceed with the next slides. Okay, actually corporate income tax is actually a tax collected from the companies, and the amount must be based on the net income companies obtain while exercising their business activities, which means the company's income that are actually chargeable for tax is only the income when the company derive the income from doing their business. Other than the business, it is not taxable. Okay, Next point is the benchmark used is actually the highest rate for the corporate income, and the income tax from the company is actually an important source of income for our government, Malaysia government. And last point but not least is reduce of corporate tax rate, proposed reduce of corporate tax rate proposed to companies and other tax person. This last point is actually referring to the year of assessment 2017, and this particular tax person here is actually referring to the tax body or the executor of an estate of an individual who actually domicile outside Malaysia at the time of his death. Okay, next I will explain about the company's tax rate. Okay, company's tax rate is actually depends on the resident status of the company. So first I will explain about the tax rate on the resident company. Okay, if the resident company with paid up capital of RM2.5 million or less, it must refer to the scale rate. So this is the scale rate, and based on the scale rate, the chargeable income of the company of the first amount of RM500,000 from the year of assessment 2016, which is 19%, has been decreasing to 1% to 18% in the year of assessment 2017, whereas the subsequent amount above the amount of 500,000 ringgit, the tax rate is actually the same. There has been no decreasing or increasing, which is to 24%. Okay. However, if the resident company with paid up capital of more than 2.5 million, the income tax rate will be 24%. Okay, next I will talk about the reduction in the corporate tax rate. This reduction, as I mentioned earlier about the last one from the previous slide, is actually for year of assessment 2017. So it is proposed that in the year of assessment 2017, there has been a reduction in the tax rate based on the chargeable incremental of the chargeable income of the company from the immediate preceding year. Okay. So actually the increasing, if the chargeable income of the company increase between 5% to 9.99%, the reduction in the tax rate will be 1%. Therefore, from this 24%, the amount that are taxable on the increasing amount of chargeable income will be only 23%. And if the increasing percentage of the chargeable income is between 10% to 14 and 14.99%, the reduction in tax rate will be 2%, so the income tax rate will be 22%. And so for the rest, it's just the same. Okay, so this is the example to make it clearer for you. For example, in the year of assessment, okay, we are actually calculating, this example is actually calculating for the chargeable income of 2017. So based on the income of 2017, the CI is actually 12 million, and the preceding year punya amount is actually 10 million. So therefore, from this 10 million to this 12 million, it has an increasing rate of chargeable income to 20%. So based on this table, this 20% got a reduction in tax rate of 4%. So from 24% reduced to 20%. Okay, if the chargeable income of 2018 is 13 million, whereby it has been a increasing percentage of 8.3% from this 12 million, then 8.3% based on this table, the reduction in tax rate is only 1%. Therefore, from this 24%, it will be reduced to 23%. Okay, next is for the tax rate on the non-resident company. Based on this table, there has not been any differences between year of assessment 2016 and 17, whereby the business income is actually the same, 24%, royalties 10%, rental on movable properties 10%, technical and management service fees 10%, interest is 15%, dividends exempted, and other income is 10%. This particular interest, which is 15%, there is an additional note here, whereby the interest paid to non-resident by the bank or finance company or for the approved loan from Malaysia to the non-resident is actually being exempted. But with the effect of the year of assessment 2017, the payment on the approved loan or by bank or by finance company from Malaysia is to non-resident company is actually non-exempted. Therefore, it is taxable. Okay, next I will talk about the tax incentive. Actually, there are a lot. When I'm doing my research about the tax on YA 2016 to YA 2017, there are a lot of tax incentive provided by the government to the local companies. But I narrow it down for the purpose of the presentation. And if you want to refer for further information, you can go to the internet and Google for tax rate 2017 under PwC or KPMG or other Big Four company. So I narrow it down based on the syllabus that we have learned on tax incentive previously. So take a look at the table here. Okay. If the companies is actually doing a business for hotel and tourism industries, there are a few tax incentives that can be enjoyed by the company, whereby the first one is pioneer status. So if the pioneer status is actually provided that the company has an exemption for 5 years for partial exemption, and the exemption is actually based on 30% of its statutory income that is subjected to tax. Therefore, the other 70% of statutory income is actually exempted from tax. Okay, the next tax incentive is ITA, income tax allowance, whereby the allowance is actually 60% on its qualifying expenditure, and this allowance can be set off against 70% of its statutory income. Next is incentive on double deduction on overseas promotion for tourism industry. The expenditure on this promotion is actually can be in terms of publication, publicity and advertisement, and also organizing trade fairs. Next one is double deduction on approved trade fairs. And the next one is tax exemption for foreign tourist tour. Actually, this is tour, sorry, from foreign tourist tour operators, whereby it consists of foreign tourists and local tourists. The next one is tax exemption for promoting international conference and trade exhibition, whereby it promote international conference in Malaysia or organizing international trade exhibition. Okay, there actually has been a difference for this incentive tax deduction on cultural performance, whereby the tax deduction from YA 2016, which is 500,000, has been increasing to 700,000 for YA 2017. So the company can enjoy more deduction in terms of this cultural performance for YA 2017. However, the deduction limit for sponsoring the performance, in order for the company to enjoy this particular deduction, it needs to incur an expenses of amounting to RM 200,000 ringgit for YA16, and it has been increasing to 300,000 ringgit for YA17. So for the company to enjoy this deduction of 700,000 for YA 2017, it need to incur an expenses of 300,000 ringgit. Okay, next is for the business who actually doing an approved service project. The tax incentive, the first one is exemption under sections 127, sorry. The company can enjoy income tax exemption of 70% from its statutory income. And the next incentive is ITA, stated under Schedule 7B, allowance of 60% on the qualifying expenditure, whereby it can be set off against 70% of the statutory income. And the last incentive for approved service project is actually an additional exemption on its import duty, sales tax, and also excise duty. And for the next type of business is actually business on the international and private school, whereby the tax incentive is actually consists of two. The first one is income tax exemption. It is 70% from its statutory income for partial 5 years, and 100% of, this is 100% actually, 100% of qualifying capital expenditures, and it can be set off against 70% of statutory income. And the next incentive is actually on additional incentive, consists of import duty and the double deduction. And the last type of business is actually ship and air transport. The incentive is actually only on the tax exemption, whereby the tax exemption has been reduced from 100% to 70% of statutory income. Therefore, 30% of the statutory income of the business will be taxable. That's all from me. Thank you.
The next slide is trustworthy. It is proposed that reduction in income tax rate, currently at 24%, be given to the following taxpayers based on the percentage of increase in their taxable income as compared to the immediate preceding year assessment. Trustworthy, executor of an estate that the domicile outside Malaysia at the time of his death, and receiver appointed by the court. This is the reduction of the income tax rate that's tax effective from the year assessment 2017. Like we can see, percentage of increase in chargeable income as compared to the immediate preceding year assessment. Less than 5, the percentage point reduction is nil. The income tax rate applicable for increase in chargeable income is 24%. For the 5, until 9.99, the percentage of reduction is 1, while the tax rate is 23%. For the next 10 to 14.99, the percentage point reduction is 2, and the income tax rate is 22%. Next 15 until 19.99, percentage point reduction is 3, and income tax rate is 21. 20 and above, percentage point reduction is 4, and income tax rate is 20%.
Bismillahirrahmanirrahim. Today I will explain about RPGT tax. Okay, Real Property Gain Tax Act 1976 to impose RPGT on gains rising from the disposal of real property situated in Malaysia. Okay, they have 3 changes in YA 2017. It is input tax adjustment on expenditure relating to acquisition or disposal of an asset, where there is any adjustment made under the GST Act to which the input tax related to an expenditure incurred on acquisition or disposal of an asset. A corresponding adjustment will need to be made to that expenditure for RPGT purpose. The timing of adjustment will be in the YA in which the disposal is made or YA in which the period or adjustment as provided under the GST Act ends, whichever is earlier, effective from YA 2015. Okay, next changes is related to disposal by way of a gift. An amendment is made to provide that the disposal by way of gift between donor and recipient is now restricted to a donor who is a citizen. Okay, the donor should be deemed to have received no gain and suffer no loss on the disposal where the gift is made within 5 years after the date of acquisition by the donor and the recipient are husband and wife, parent and child, or grandparent and grandchild, effective from 1 January 2017. Okay, last changes is submission on RPGT returns by nominee. Currently, submission made by a nominee who has no place of business or abode in Malaysia is to be paid to the Inland Revenue Board's office in Kuala Lumpur. Such submission can now be made in any IRB office, effective from coming into operation of the Finance Act. Okay, that's all from us. Thank you.
네가 쓴